Hey everyone, Brian Hoops from Midwest Market Solutions with our Market Insider TV, our WASD Supply and Demand Report webinar. Report was held on July the 10th on Friday. Hope the report treated you well. We're going to take a look at all the information that the report had to tell us. And then also, we're going to take a look here at what we can expect going forward and some strategies for the markets in here. We have 11 brokers around the Midwest. There's a list of our offices. Springfield, Missouri is our home office. Storm Lake, Iowa. Pocahontas, Iowa. Yankton, South Dakota. Omaha, Nebraska. Thief River Falls, Minnesota. Roseau, Minnesota. As well as Verona, North Dakota. And Enos, Montana. We clear through R.J. O'Brien. Check us out online and give us a call if you have some questions. I know any of our agents would be glad to talk with you. So in the report, USDA updated old crop and new crop ending stocks, and I think this was the key driver for the market. Old crop stocks came in very close to expectations for corn, but well above it for soybeans. And this is a big increase in soybeans and in corn from previous months. And it puts, even we had such a small crop last year, reduced crop because of not only poor yield, but also because of PPP acres or prevent plant acres. We're still, our ending stocks came in almost exactly the same as the previous year, as our demand trends were very slow. Soybeans did cut into our huge ending stocks, but still 620 million bushels of old crop stocks is a tremendous amount. And now for our new crop stocks, this is one that I was closely watching. Compared to last year, we're 400 million larger than a year ago. It is down from last month. We expected it would be. And look at this wide range of estimates. I thought we'd be in the 2.8 range. The average guess was 2.7. It was 2.648. So this is a big number. And if we grow a big crop, there's ideas that we're going to see much larger numbers than this. Soybean ending stocks 425 million, a jump from last month, which is what we expected. And wheat stocks also a little bit larger than a month ago and in line with the trade guesses. So we also had soybean, corn production numbers, as well as wheat production. We'll get to the wheat production here in a second, but no changes at all from last month. Corn yield last month 178.5, soybeans at 49.8, exactly the same. The only thing, the production changed, and that was due to the change in the acres for both corn and soybeans from a month ago. World production numbers virtually unchanged as well. Now the only number that really changed here was soybeans in Brazil, 126 million tons, up from last month, and it's other than that, just pretty much unchanged. But you look at compared to a year ago levels, this is a much bigger soybean crop. The soybean crop in Argentina is a little bit smaller. Corn just slightly smaller than last year, but much larger in Brazil. And we look at our world ending stocks. Corn stocks for last year, 312, almost 100 on soybeans, and wheat at 297. But our new crop world stocks, corn increased from last year. It's at 315 million tons. Soybeans down slightly from last year, but look at this wheat number. Compared to a year ago levels, 314.8 million tons of wheat. This was a record 316, so we're down slightly from that. But compared to last year, there's a lot of world wheat stocks, and that is something you have to watch out for when you're talking about exporting wheat in the world market. Ending stocks for soybeans, just slightly lower, and smaller corn stocks than a year ago, and much smaller than the average trade guess, but pretty much ignored in the market action on Friday. As far as our supply and demand revisions, very few changes in here. The big change was the acreage numbers, of course, in corn. No change in yield. Now, for bulls that are hoping that this market's going to recover, historically, it is 7 out of the last 7 years that we have seen the average trade guess, or actually the yields by the final, improve above 178.5, 7 out of the last 7 years. So we can add an average of 2.7 bushels per acre to this 178.5 number. And you're looking at a big yield, and that's going to give us some big carryout numbers. So this production number down a billion bushels from previous months due to the smaller acres. And you look at our demand side of things, nothing great here. Domestic usage down 175, exports down 175 million, puts our ending stocks at 2.645. Now, I was asked about this increase in cash price, and it really means very little at this point in time. That's what the USDA moved this up because of a big drop from our last month's ending stocks, but this means very little as far as marketing, and to concentrate on it, I think, is rather simplistic, and you don't want to focus on that. Look at these ending stocks numbers and the possibility that this number here, this yield number, is going to increase in subsequent reports. In fact, we have our numbers. This is our numbers versus USDA's. We're at about 181, and we're assuming good growing conditions for the rest of July, and this big crop to get even bigger. That's going to put production at 15.2 billion bushels. And I think as far as the demand goes, if there's anything optimistic, it's ethanol recovering this much. I don't see that recovering as much as what the government expects. And exports, they have it, I think you're optimistic in here. I think you can reasonably expect we're going to see some better export business if we have low prices. But 2.1 billion bushels, we've done that 2 times here in this brief snapshot of history. So it doesn't happen very often. I have carry-out numbers, 2.976 billion versus the USDA. I think these numbers, especially yields, I think the demand is all baked into the market already in here, and these yield numbers are going to grow in subsequent reports. When we get to the final, I think we're looking at closer to a 3 billion bushel carryout than we are 2.6. There's not much to be bullish here about in this corn market. All right, this graph here is historical ending stocks for corn, and you look at where we're at this year. This is by far the largest we have going back to the late 90s. You can go back to the the PIC program, 83 to 85. You could see some export ending stocks above this, but that was kind of a special year, special 3-4 years where the government was paying farmers to store crops. You go back any time in history, this is the largest ending stocks that we've had in recent history, and stocks to usage ratio, it's the largest since going back into 04, 05 in this time frame, and there's just not much to be bullish about here in this corn market. As far as soybeans go, again, minimal changes, small increase in planted acreage numbers, no change in yield. So as you look at our demand side of things, crush increased 15 million bushels, no argument there. We've had record crush all this spring and into the summer, so I certainly think that's realistic. But you do have an increase of beginning stocks, you have increased production slightly, and what happens if this yield number increases? Assuming normal growing, I think we will see yields increase, and that's going to bump these ending stocks to 425. In fact, if you look at our category again, I have yields at around 51 bushels per acre. 5 out of the last 6 years, soybean yields have increased from the July report into the final, and by an average of 3.1 bushels per acre. So if you add 3 bushel per 0.1 to this, you're looking at 52.9, almost 53 bushel an acre. I'm at 51, and I jumped the carry out to 537. If we do a normal increase of yield, you're looking at carry out of well over 600 million bushels, and that would go back to similar to last year and be very close to the second largest in history. That's what last year ended up being, is the second largest carry out in history. As far as our demand goes, crush, no argument there, strong crush numbers. Exports, this is a big jump. You're going 200 million bushel increase. You're looking at 20% increase of exports activity, and this all has to be because of China. So if relationships turn bad with China, and President Trump said he thinks phase 2 deal is kind of dead with the relationship being harmed with China, it's going to be tough, I think, to see much improvement as far as exports go. China is the biggest customer by far. We're not exporting much in the way of soybeans to any country other than China at this point in time. So carry-out numbers here, I think, are too low at 425. I think they're going to increase to at least 537, and I think you can make an argument it may end up being over 600 million bushels by the end of this marketing year. As far as our stocks and stocks to use ratio goes, 2 years ago, all-time largest ending stocks numbers at 900 million. Last year, it's turning into this 600 million bushel number. And this year, I think we've got a chance to raise this from 425 up to near this 600 million bushel carryout level. So not bullish again. You've got big carryover stocks. Stocks to usage ratio has dropped a little bit where you can't consider it friendly. You get back into this time frame, this is where I think you'd be considered friendly to bullish, and certainly not at 10%. All right, finally, we're looking at the wheat market. And we did update wheat production. We haven't looked at that yet, but all wheat production is down a little bit compared to the trade guess. And from last month, it's almost 50 million bushel decrease, so kind of friendly there. And if you look at the category breakdown, soft red wheat, Chicago down about 17 million, and hard wheat actually had the biggest fall of about 33 million bushels. But it was a Chicago wheat that rallied sharply on Friday. Spring wheat, first estimate of the year at 550 million bushels, so pretty much in line with expectations. So a small drop here in the all wheat category, and it did lead to some heavy intermarket spread trade for wheat futures. As far as our balance sheets go, yields down just slightly, harvested planted acres down just slightly, and that has beginning stocks up 61 million bushels because of poor usage in the old crop category. Production wise, we dropped 53 million, so almost a wash there. And they didn't make many changes in the balance sheets. Domestic usage down 10 million bushels, total usage down 10 million. They left exports unchanged, and that's certainly advisable given the export profile so far this year. And in all, our ending stocks are at 17 million bushels. But look at these old crop stocks, and the next chart tells us a little bit better story. So I'm going to pull that up here. As far as our export profile, we have. Oops, I'm going to go back a little bit farther here. We have 1, 2, 3, and now 4 years in a row where we've had carryout levels at 1 billion bushels or larger, and you can't be bullish with that. And stocks to usage ratio, you look at these 50s all across here. So tightening up just a little bit, 946 million. I think these numbers are pretty close to being justified. This is just, unfortunately, we've got too much wheat supply in the world and in the U.S. This 946 million bushel carryout is not going to get the job done as far as our wheat profile. Ending stocks in here, as we talked, 1 billion bushels 4 years in a row. This year we're just below it, but you can see this mountainous supply of wheat compared to what we had in 07, 08, or even back in this time frame, we were 500 to 700 million bushel carryout. We've grown accustomed to having 1 billion bushel carryout, but it also means we don't have much in the way of demand rallies. If we have supply rallies, you definitely have to be selling out of wheat production if you're a producer. So corn and soybean rallies, we've had rally in here, make sales and buy puts as the weather is going to determine that long-term direction. We think the weather looks pretty good through the end of the month. Not everybody's going to get rain, but areas that are going to have some mountainous crops. So buy puts for protection. You can also sell calls options to cheapen that initial cost. There's a limit to the upside, but with these big carryout numbers, I don't think you have to worry about concerning about this upside potential. Now, don't be long or unprotected after 4th of July. We're recording this after the crop report, after the 4th of July. You don't want to be unprotected in here. That includes old crop and new crop. We've been aggressive seller of this crop, this marketing year, and also looking ahead to the 21 crop year. We've been selling new crop corn as well. So we definitely want you to be defensive in this market. There's no carry in the new crop soybeans. Sell for fall delivery. Look to re-own. Don't be storing the crop. And I think wheat exports are going to be pretty poor in the second half of 2020 due to that increased competition. So hedge, protect yourself on any supply rallies. Chicago wheat has rallied 60 cents here since the end of June. So there's a rally. And I think you really have to be looking at protecting that. Have a great weekend, and we'll be back in another month with our next webinar. In the meantime, contact any of our offices. You can find them listed at MidwestMarketSolutions.com. Take care.